So what are those restrictions?
Well, it's just that it has to be known when they sell it. So if you see all them selling their stock, you know something's up.
Uh-huh.
And when they buy it, there's a period that you can't trade it at all, say like for 2 years.
Wow.
You can't trade it at all. Cause actually, it usually get it at a discount. So if you bought it and then just sold it, you would automatically make some money. You know what I mean?
Oh, okay.
Because you usually sold at a discount, so you have to hold it for 2 years and let the market determine the value of the stock, you know what I mean?
Uh-huh.
So in that time, it'll either go up or down, and you'll either make money or not, but you can go ahead. It's just like if you have an insurance policy, you can't, you have a suicide clause in there, the first 30 days. You can't, you can't be buying no policy and cashing in tomorrow, you know?
Mm-hmm.
Because they usually put a years or something on there, so if people are in a suicidal mood, maybe they'll change their mind within a year or so, you know what I mean?
Mm-hmm.
Because that's a desperation move, you know?
Mm-hmm.
So it's sort of like you can't trade it right away.
So what is this about, like buying back stock? What does that mean?
The company
Uh-huh.
company has a lot of excess cash. So instead of investing it back into the business, like making more automobiles or more airplanes, expanding, building more plants, hiring more people, we got it right where we want it. So in order to strengthen our position, we go to the, we think that our stock is such a good buy that nothing else we could do with the money would be as good of an investment. So we go to the market and we buy back our stock, and that strengthens it, you know,
Mm-hmm.
strengthens the company because you don't have, see, each share represents ownership in the company. And if I buy it back from you, then you don't have it. We own ourselves. And you can even take it private if you could get all the shareholders to agree, or the majority of the shareholders to agree. But we go to the market and we say, and we have to make a declaration. We can't do it sneaky, you know.
Mm-hmm.
We say, oh, there's a buyback, you know.
Mm-hmm.
And then people that want to sell it, they sell it, and people that say, oh, well, if they think it's such a good investment, I'm gonna hold on to it too.
Right. So now, and buying it back, and then deciding that you're gonna go private. How much other stock do you need to own before you can actually declare that?
I think 51%.
Okay.
I'm not sure.
Okay.
But you have to let people see when you get 51%, then you have the voting rights.
Mm-hmm.
And then you're making the decisions. The shareholders, the other 49, they got 49 against 51, where you lose, you know.
Mm-hmm.
So it's not really private, but you have the control.
Mm-hmm. So now, when a stock falls so low, then they have to be uh, they can't be on the market no more because they below a dollar.
You can't take it off the market just because it falls low.
Okay. Well, what if it falls below a dollar?
It could fall. It has to fall chances are it's not gonna fall below $1. The stocks we talk about on the New York Stock Exchange. Now there's the Nasdaq.
Uh-huh.
That's where you trade the lower valued stocks.
Okay.
But when you trade on the New York Stock Exchange, the stock has to be worth so much before it's ever listed on the stock exchange. It has to be selling for above a certain price. It has to have a certain amount of shareholders, like,
Mm-hmm.
millions, because they don't deal with those semi-private companies. That's the over-the-counter, the Nasdaq market, like the NASD was,
Mm-hmm.
regulating. So for a stock to get down really, really low, down like there was Lucient Technologies, which was part of AT&T, their stock went down to like 3, something like that, below $10, I think. And I forget what the reason was, but this was when I was in Michigan. You know, that's the company Junior worked for. It was first it was Bell Labs, then it was Lucient Technology. You know,
Right.
and it failed. It was trading for over 100, and Junior and Melinda had their somebody's buying it. So I don't know what he did, but that was when I was in Michigan, and he was uh, telling me how poor he was, cause his stock was down. But see, before that, I think that was in '87 when they had that little like market crash. Before that, they didn't have that thing in there that when the market goes down 5%, they put in a stop measure. They have to suspend trading for at least 15 minutes because it's happening so fast and they can't record. You know, you got to record every time it changes hands. You got to enter that into the database, you know, and they get all behind and everything gets all messed up. So they have to stop it and then they restart it. And if it continues to slide, then they stop it again, you know. One day it opened up recently, you know, since Donald Trump been in there. It opened up and shut right down within the first 10 minutes. And then they put it back up and then they shut it back down again. It was sliding so fast.